Hi, everybody. Welcome to this new episode of Prime Venture Partners, Startup Podcast. I have with me today Ashish Kashyap, the founder of INDmoney. Many of you in the audience, amongst our listeners, may already be familiar with and using the service. But I've known Ashish for a long time, well before his INDmoney days. And it's a great pleasure to have you on the show, Ashish. Welcome.
Thank you, Sanjay, for having me over.
Great. So, Ashish, you've been, if I may say, a veteran of this internet economy and seen the evolution of a lot of things, in the early days of the internet in India. It'd be great if you could, trace a little bit about your journey and share, the early days and what you've seen and what brought you to the INDmoney journey.
No, absolutely. And Sanjay, as I was sharing with you before we started this podcast, I think the common thread between you and me is that we've been very fortunate and also in some sense struggled to have witnessed the Web 1 in India, the Web 2, and now entering the Web 3. And of course, there have been transformational changes during these phases, right from the problems that we had in the early era of talent and also execution and deployment of services was really expensive. And the worst part was that any great idea did not see the light coming out of India, made in India, because there was just not enough fodder for users. There was just not enough critical mass of users, which is why you would typically see that there is a company sitting out of US or China without having even set their foot into the country would, just through global network effects or global virality would have captured a space. So in fact, a lot of ideas during my ibibo incubation days, today's date have become very large, right? We did this interesting karaoke feature, which is what looks like TikTok today's date. We did these fantasy gamings, which today's date are very, very large. And, there was just not enough consumers back in 2007 or 2008. So I think the biggest change in my view is twofold. One is that there is now the engineering talent coming out of the colleges want to participate in building valuable services for consumers right here, which in the past, they wanted to typically join a software services company or a Microsoft or any of the global multinationals. So I think that's changed significantly, which means now we have the creator economy in place. The second thing, which I think has shifted and changed significantly, is just the sheer volume of users. So I remember getting your first 1,000 daily actives or getting your first 100 transacting users was a Herculean task back in the version 1. Today's date, you are able to get the feedback loops from the consumers really fast. If you put something valuable, you're able to get the feedback loops. Those feedback loops help you to iterate and improve and get the feedback loops further and then massify. It was just very, very hard earlier. And that's, I think, has significantly changed by the sheer volume of users which are there, which was really, really elusive. We always used to have a hope that, yes, one day, ek din customers aayenge, ek din revenue models banenge. But I think that's happened now. That's the second thing which has changed. And third, I think deployment of services has now just become much easier. So I think these are the three very significant changes. And out of these, I think the first big one being the creator ecosystem is in place now. You have the people wanting to build and make it and truly make in India and solve local problems. To your other question.
That's terrific. So let's talk a little bit about your journey specifically, Ashish, for our audience as well. I think it's a great, macro update that you pointed out. Tell us about your journey, how you got into this space, and the early years.
So, do you want me to talk about my years building up goibibo, or do you want me to talk about why are we building INDmoney?
We'll start with the ibibo days, and because you also, I guess, oversaw PayU and things like that as well. So
I can of course give a quick. So typically from ibibo started as an incubator. The thesis out there was that we will build a prime ventures type of a little fund and we will incubate a lot of businesses, except for that we will kind of help the execution. But given the timing, we pivoted that into what today has become goibibo. We built goibibo back in 2009 and made it into a leading online travel aggregator. I'll talk about the thesis then. And while I was building goibibo, and while I was obviously seeing that there are a lot of problem statements and a lot of gaping holes which exist in the OTA space, like absence of a good, reliable hotels ecosystem, fluctuating prices, very difficult checkouts, payments failing. At that moment of time, we used to use third-party payment gateways for the checkout. And I realized that the success rates are very low, which really meant that the cost of acquisition is very high. And I decided that let's build our own payment system. And we started integrating with all the banks. And that gave the birth to ibibo Pay. That's how, and then that just jumped up success rates from X to 2X, which essentially lowered our cost of acquisition. And that motivated me to externalize the payments business to other merchants. So I said, if we can do this for goibibo, we can do this for hundreds of merchants or hundreds of other e-commerce players. And we rebranded it to PayU because our then investors, which is Naspers, had bought or invested in payment assets and wanted us to kind of have a unified name. So that's the only thing that changed. And we branded the ibibo Pay product to PayU and externalized it, and it just became very, very large. One of my learnings there was that it became large on the back of a first principles thinking, which is solving the problem for goibibo, the anchor merchant. And then subsequently, when we acquired redBus, then solving the problem for redBus. So this was a very, very intersected kind of a journey, right? And during this journey, while we were building goibibo, we realized that the hotel space is very broken. If I were to make a booking on an OTA and I were to try to check into a hotel, the hotelier wouldn't service the booking. And as a result, we solved the hotelier facing system, and which resulted in us basically delivering better pricing and a more reliable hotel booking to consumers. And very quickly, we became the largest hotel provider. During this build out, we saw an opportunity in acquiring redBus. It was a very, it was a very small but a very beautiful asset because it converted traffic beautifully. This is back in 2012. And at that point of time, I convinced our investors to give us capital to acquire redBus. It was at that time $100 million acquisition, an eye-popping acquisition. In today's context, that's like peanuts. But that was perhaps the largest tech acquisition for that.
I still think even today, $100 million acquisition is substantial. I mean, there are valuations of companies that go past, but people paying that much money, essentially in cash, is not that frequent yet.
Correct. And it was a very messy acquisition, actually, because of a lot of human resource problems, right? So the day 7th of the acquisition, I was sitting in the office with all kinds of human resource problems. Luckily, I understood the space well, and I did have people strength at goibibo to move people around from goibibo to redBus. And I decided to actually run the company as an operating person for a bit. But the beautiful part of it is the acquisition year, if let's say we are doing 100 transactions a day, in a span of 5 years, we took that by 10 times. We just scaled it beautifully. Lots of learning there. But definitely, what we definitely bought into was this high converting engine, which is very difficult to replicate. We, of course, took that asset to multiple markets, which is Southeast Asia, Latin America. I think in its own right, that asset itself is at least a $2 billion plus valued asset. Very, it's an amazing asset. We also built out this whole bus tracking feature, which was a huge pain area and also created good, strong network effects between passengers and bus operators and the third side of the market. But yeah, I mean, I think that actually gave me a huge amount of learnings that, acquisitions are not easy things to do. We hear a lot, and it needs to be handled in a very mature way. And at the same time, the acquiring company needs to have the maturity and the management strength to be able to digest acquisitions to make them successful, which is why you actually hear 8 to 9 acquisitions are failed acquisitions and put underneath the carpet. So yeah, I'm very proud of doing that difficult acquisition. It was there was a lot of controversy, there was a lot of infighting, a lot of things which were shocking for me, right? Because I was also experiencing a lot of that stuff for the first time. But I think we handled it well, and the outcome was just amazing, because we could also, given the problems, I could take control of the company very quickly and get on top of the game very quickly and then scale it. And then parallelly, we kept building goibibo. It became the largest hotels player in the country, largest mobile app, the biggest. The time when we actually beat Make My Trip on mobile app, Hollow, was when we launched this beautiful program called Go Contacts. It was essentially leveraging the phone graph. So we'd never heard of any kind of viralities and network effects happening in an OTA sector. By introducing the phone graph inside the app, which meant that if Sanjay...
I remember the Deepika Padukone ads.
That was actually later. That was actually later.
Okay.
I mean, I personally didn't believe in investing in movie actors and actresses. I really believe in growth engine being coming from the product. So when we launched the Go Contacts program, where, whenever any of your friends travel, you're going to make points, which just took off massively. We just saw that our mobile apps are hitting the charts. And we just became the largest mobile app-based travel. Of course, I think there are certain sectors or categories where we still were a close number two, like air ticketing. Holidays, we never did, because I personally didn't believe in that vertical. I believed in this whole unbundling as an opportunity. But yeah, I mean, look, this was very exciting, right? I mean, for me, the learning was that there is absolutely no premium in being a first mover in the market. The premium is on how do we innovate, how do we execute faster, how do we serve the consumers better, how do we get the best NPS, how do we get the lower CACs. I think the premium is in aspects such as this, rather than just saying that, okay, I'm the first mover. Yeah, I mean, I think it was a fun journey, building out these good ubiquitous assets like PayU, redBus, goibibo, and then finally creating a very positive outcome for all constituents, right? At the end of the day, we as founders need to do that. That's our fiduciary responsibility. If we have raised capital, if we have people backing us, and we want to do that for our investors, we want to do that for our team members. And I feel really proud of having gone through this journey.
Superb. So now let's fast forward, post the, I guess the merger with Make My Trip on the goibibo side. You moved on, and I know you said there is no real benefit to being the first mover, but INDmoney is kind of the first mover in the space you're in, certainly with the approach. So tell us about, what is INDmoney? How did the idea come about? What does success mean for you in this company, and where the company is at today?
Yeah, so we introduced INDmoney in 2019. And the problem that I wanted to solve was very simple, that, consumers, if they have to improve their financial life, they should be able to manage all of their money in one place, right? They cannot have money which is fragmented. They should be able to organize, they should be able to figure out all about all kinds of their money categories through a single place. So that was the whole thought process. The second insight out here was that consumers are lazy. They will not do this data entry somewhere and to manage the money. It should be all automatic and all connected. That was the second insight. The third insight for us was that the traditional financial services ecosystem has been very, very non-transparent, and actually, is not able to...
It's on non-transparency, right? Actually makes a lot of money because of that.
Yeah, so it's been absolutely non-transparent, and hence you as a customer are losing a lot of money on the table, very basic stuff on the table. So that was the third insight for us. And with that insight, I said, if we could give a product to consumers which is transparent, which is automatically enabling consumers to bring their financial life together, a single place where they can, save their money, they can track their money, they can invest their money, it'll be very valuable for them, because then that same platform will be able to tell them how do they optimize their financial well-being, how do they improve their financial life, how do they improve their retirement goal from trying to retire at 60 to 40, how can they typically purchase their home or a car or whatever goal that they have. Should they need insurance or shouldn't they need insurance? If they are exposed to a very poor loan, should they be moving out of it or transferring? Should they pay back their home loan or should they be actually investing that money, right? So a lot of these unanswered questions, which actually have mathematical complexities, which are also not solved through Excel, we say, can we provide this in a very dumbed down, simple way to the consumers? That was the thinking. The first cut of the product was very simple. Minimum viable product in 19 was automatic tracking. That's how we started. And as we executed, our biggest hook became the US stocks, where we solved a lot of core structural problems. And the core structural problem there we solved was, we realized that people want to invest in Google or Facebook, but they're unable to do it, number one. Number two, even if they could do it, it's usually expensive for them to send their money from their native savings account to a US stocks wallet. It's really expensive. On a 10,000 rupees, a person would end up giving to a traditional bank almost 1,500 rupees of fixed fee and another 500 rupees of markup charges. That's 2,000 rupees. So imagine 2,000 rupees gone in 10,000 rupees. That's just horrible. So we solved that structural problem by saying that let's become a neobank ourselves. And when consumers are opening an account with us, then their neobank is also opening up, their US stocks account is also opening up, and then they can use their neobank on INDmoney to send money to the US stocks wallet of INDmoney. And we made that cost zero. We made it fast. In fact, we are testing now Insta remittance, and all of this through regulated rails of RBI's LRS. This structural problem has actually helped us to really help INDmoney to grow and make this a very hook. So people come for US stocks and then they do many other things. They open their deposit accounts, they do mutual funds. We are very soon launching Indian stocks. They are able to then do their financial planning on the product. But we felt that by solving this hardcore structural problem, we have not only solved a very big problem, but also created a very good hook for the consumers to come into the platform. So yeah, so that's what INDmoney is, and that was the motivation, and that's where we are. We are about now more than 5 million users on the platform. Most of the growth has come actually in the last 12 to 16 months. And we are growing very fast every month. Approximately close to $2 billion of transactions have happened on our platform in the last 1 year, which also is a significance of trust score of the platform, becoming better, or the trust acceleration happening with the platform between consumers and the platform. And we are, of course, now building many other services for the consumers, which can further improve their financial lives. Typically, many platforms would use payments as a hook. We felt using payments as a hook didn't make sense, given there's so many large players in the space. And hence, we really chose using US stocks as a hook and tracking as a hook when we have introduced the product in the market.
Got it. It's awesome to see the journey and the pace at which you're accelerating now. You mentioned the word trust, right? And regardless of what the journey or the product is, right? And obviously in financial products, where people are sharing the details of their finances, and perhaps even trusting you with holding their money or deploying their money, trust becomes extremely important. But we're seeing that with the data businesses, we're seeing that in pretty much all other businesses as well. The challenge for a startup is really establishing that minimum threshold of trust so that people will try the service out. Given our audience, it would be helpful if you could talk about some techniques, not necessarily core IP, that maybe that you see in horizontally across other companies, what has worked, what might work better, for people to try out and keep in mind.
No, this is a very good question, and I would love to share my insights here. So I think the world is all about take and give, or give or take, right? So what are we as fintechs or consumer tech services taking from the consumers, right? We're taking something from them, right? And there is an effort which the consumer is making. So put it very simply, let's say when a consumer is registering on a website or a mobile application, a consumer is making an effort. Mm-hmm. And the way to accelerate trust relationship is to be able to give back to the consumers. If effort is equal to, let's say, 1x, can you give back value, which is 10x or 20x to the consumers? So if a consumer came into your product, he connected his Gmail account to register, he put his first name, second name, there's an effort. Now, the trick here is that how do you give back for this effort? How do you give back to the customer 20x value very, very quickly? And, just to now draw parallels with INDmoney, when a consumer would come in the early days on INDmoney, and he or she would do registration, and we would ask for a permanent account number, PAN number from the user.
Right.
And that's where the big hurdle was and drop off. But against that PAN number, what we gave back to the consumer was very quickly, in few minutes, his financial life, right? That this is what you are doing, and these are the good things you're doing, and these are not the great thing. These are the insights. And if you were to do these actions, this is the value which will come to you. We believe that act of giving back to the customer 10x value helped us to create or to have trust acceleration between the platform and the customers. So I think the equation is very simple. If you're taking 1x from the consumers, give them back 10x. If you're taking 1x in if it's not in units of energy or units of effort, if it is in terms of money, or if it is purely in terms of data, right? In this case, he may be giving you a PAN number. The equation is very simple. If you're going to give back 2x to the consumer, that trust gap won't happen. You need to give 10 to 20x back to the consumer. I think that's a hard question we need to ask ourselves. Are we giving back value very quickly to the consumer or no? The other thing is, you cannot be in this fallacy that, okay, consumer will come and then one day I'll give him value. So there are certain things you will give him long-term value, but the consumer needs to feel value very quickly, right? In the D0, D1. If he doesn't feel D0, D1, he will not sustain, neither will the trust not be built, but also he'll uninstall the app, right? So hence, giving back value very quickly to the consumer is really critical to also build trust.
Yeah. So one of the techniques people use a lot is actual cashbacks or coupons and things like that. What are your views on that? I know at certain points in time, perhaps they can drive usage, but would love to hear your thoughts.
Yeah. So I think my view is that, let's say when we go back to the Web 2, the two era of ours, right? Sanjay, yours and mine, where consumers were just beginning to form behavior. Their behavior forming was happening. Let's say people used to not ever hail a cab, okay, as an example. Or people would never do a food delivery, or people would not book hotels. So a bit of trials we need to do, and that can be in the form of cashbacks. But again, with the methodology that, listen, this cashback plus cost of acquisition, or this cashback is nothing but cost of acquisition, and needs to break even. Okay. But I think today we are in a situation where we as founders and entrepreneurs need to build good economics business, because the consumer is already there. The behavior to use the medium already exists, right? I think if in some space where the effort to the consumer to shift behavior is a lot, then I wouldn't mind giving a cashback, provided there's no gaming which is happening. Because in India now, if you also give cashback beyond a threshold, there's gaming which starts, right? So we have to think through well. But if there is some big behavior shift happening that you want to establish, right? Or let's say if you were taking E is equal to 1 effort and you need consumer to do E equal to 5, while the returns to the consumer could be 100x, I think it's okay to give some trial cashbacks, but one has to do it in a thoughtful way. One has to do it in a manner that, okay, when I do this cashback, this is still a positive unit economics business, right? I think negative economics business, in general, my view is that it'll be now very hard, right? I think we had a justification in the past that, listen, we need to build consumer behavior to use the medium. I don't think that's the case anymore. So I think very clearly your core business needs to predicate around the core value of the product and not the cashback. Great. So if I were to do today's date peer-to-peer payments, and I say, simple maths, 100 rupees cashback. I would be able to collect 20, 30 million users. And honestly, that cost of acquisition on paper would also look low, but that'll be a negative economics business. And the core product has not delivered any 50x, 20x value to the users.
To the user, yeah. Great. No, these are really good points, I think, for startups to think about, where you're saying where there is a completely new behavior that you're trying to establish, then you may have to incentivize people to come and try it out. But where the behavior is already there, then it's really focus on giving them 10x value rather than sort of buying the business. That's a great point. You built big companies, and INDmoney is again the start right from scratch. What would success feel like for you here, right? I mean, why are you doing this? Certainly, everybody has different motivations to become an entrepreneur, and I think most people mistakenly think it's for the money. I think I always tell them there are much faster ways you could get rich if you wanted to do it for the money. But I would love for you to tell people what your motivations are here.
Yeah, look, I mean, I think for me, I just feel that financial services space, which INDmoney is trying to solve, is very, very broken. I think there has been a lot of innovation which has happened on payments, but other than that, it still continues to be broken. And the rails which are there in the financial services space for many other things other than UPI is all very, very broken and still traditional, right? So there is a lot of work to be done. From my vantage point, I'm just basically motivated that can we make financial services, can we democratize it, right? Can we make it easily accessible? Can we democratize it? Can we make it transparent? Can we just basically uplift people's financial life? I think there is a huge noble cause behind what I'm doing, because just by saving very small basis points for users and by giving them extra basis point, and you're adding that saving and giving that extra basis point, just uplifts people's financial lives because of the power of compounding. So I think the whole INDmoney journey for me is motivated around or predicated around the fact that, listen, let's democratize it. Let's uplift people's financial life. Let's better people's financial lives, right? And make it easy for them to do so. So that's really what excites me. So the whole impact is the biggest driving factor for me.
Yeah, I always, as we do a lot in financial services ourselves. And I think my motivation here is always, just, improve people's lives. And, financial success is an outcome. To me, it's rarely a goal. And I think, all of us have experiences where we chased it and it didn't work out. And when you didn't chase it, it happened. So I think entrepreneurs also, really people need to focus on what problem are they solving, and is it a large problem that they're solving, and will the world be a better place? And I think their own financial success will just be an outcome of having done that, right? Since you're in the space of, money management or finances management, one of the hot topics here over the last 18 months has been the whole crypto space. And we've all seen a lot of actions, a lot of talk on the regulatory side, etc. What are your thoughts on this? What do you think, is the direction we need to go in India, and where are we on that journey?
Yeah, look, I think firstly, first point, I'm with the regulator. There has to be clear regulation. Okay, I'll just give you an episode, which is as of a few days ago. Somebody impersonated my Instagram account and then started soliciting some crypto money from people. Okay. So this just happened recently, I think, and then we needed to find ways. And I don't use Instagram that often, so that Instagram impersonated account actually had more followers than I have. So people are actually believing that that's the real account. So I think firstly, very clearly,
you arrived, if somebody's gone through the trouble of creating a fake Ashish Kashyap account.
It was just a complete copy paste, right? And including the latest pictures on it, right? So wow. Clearly, I think that there has to be, regulation, because there are leaks. There are leaks, and some of the leaks would be pretty large. So there should be regulation. I think that's the first thing. My second point is that crypto, in my view, is not a local currency. It is a global currency, much like what we do with US equities, etc. Right? So I think it's not just the fact that crypto should be regulated, but also the movement of the money into the wallet to purchase crypto, that also has to be regulated and checked for sources of income, etc. Like, for example, when people are buying INDmoney's engines are looking at sources of income and doing hundreds of verifications, which just makes everything so kosher. So I think similarly on crypto, I think the movement of money, and ideally the crypto should be bought in, I think, a global currency than INR. It'll be A, efficient for the users, and B, the whole movement of the money will get reported much better. I think that's the second thing. Third thing, my view is that I think crypto and the use cases around crypto are here to stay for sure, right? I mean, I think it's going to be a very important currency and perhaps an asset class over a period of time, which basically makes transactions more efficient in the long term. So yeah, I am a firm believer of crypto, but obviously for me to start jumping into it as an operator, we would definitely need the regulator and the government to definitely regulate it and create a rule engine around it. And that's something which I would personally really, really welcome.
Terrific. That's actually, I think, the prudent view here, right? I think at the end of the day, you are dealing with money, and as a financial asset, that's the right thing. So let's talk outside of work. And I mean, especially since you ran a large travel company, I'm guessing I'm guessing what your answers are going to be. But when you're not working, what are you doing? What is fun? What do you see?
Yeah, look, I mean, three things. I love catching up with friends. So I do catch up friends and socialize a lot, right? Even during COVID, I did so. That didn't stop me, but of course not in large groups. So yeah, and second, I play squash. I love the game. So if I'm not at work, you will find me at the squash court. And the third thing, of course, is that I love traveling. These are the three things. Travel, of course, has been very restricted for the last few years, but the first two things is still going strong.
And where is your first destination?
So yeah, I think the minute things kind of settle down, I definitely want to go back to Tokyo. I like that place. Lots of energy.
Wonderful. Great. Couple of thoughts on lessons learned over these past. I don't mean to stress a lot on the 20 years that you've been working, but yeah,
wow.
What
I just got reminded.
Yes. But what would the Ashish of today be telling the Ashish of 20 years ago?
Yeah, look, I think the first one is that to everyone out there, do not undermine legal contracts and paperwork. So when I was younger, I wouldn't read through legal contracts and paperwork, etc. I think one should not undermine, because if you fail, right, nobody cares in any case, and you'll of course keep trying. But at some point of time, if you're trying, you will succeed, right? And when you succeed, you should have very strong paperwork in place, right? Whatever paperwork, whatever, right? Whether it is a shareholder agreement, whether it is any kind of agreements, but having strong paperwork and agreements between you and your co-founders, between you and your shareholders, I think that's an important thing. A lot of us coming from the struggling era of internet evolution of India, you kind of ignored that, right? So I think that's the first very important lesson there.
That's a really good point. And it's, I mean, all of us are so used to also click through accepting terms and conditions. And you're never taught this in any MBA program, I would think. So contracting are critical. What else?
Yeah, I think the second thing is that earlier you surround yourself with great people, better it is. And many a times when we look at people, we look at them from the prism of the experience that they have, right? I think I would basically put a premium on intentions and premium on evolution than experience, because many times experience seems like experience could be just existence. So as an example, let's say if anyone is trying to build a payments fintech startup and is wanting to build a team, the default reaction would be that let me go and find people from payments industry. Now, the problem statement with that is many people will be in existence and their impact would be an attribution error. So hence, I don't think when we are surrounding ourselves with great people, it makes sense for us to stereotype and say, oh, I need to have people from this industry and who somebody who's worked 20 years or 10 years. So I think that's a second very important point, that don't get stereotypical about people while you're surrounding yourself, with great people. So yeah, that's the second big one in the last 20 years. The third is essentially, look, you want to execute and fail faster. You want to reduce the cost of failure. Failing is good. Reduce your cost of failure. You will fail. Even large companies like Google face lot of mini failures. They don't talk about it, but every company, every individual will find lots of mini small failures, right? I think the trick here is that just do it faster and reduce the cost and get your learnings out. Many times when I speak to people, when they have failed and then succeeded, a lot of them have not derived any insights out of those mini failures. I think that's important.
Fabulous. I think there are three amazing learnings, Ashish. So just before we close, I thought, you've seen, as you said, the first phase of, Indian startup ecosystem. You're now, I would say, probably midway through the second phase of this. And, yesterday we just saw the announcement of the 100th unicorn. Of course, there are several that I personally know, a couple that are, have not announced, but they had become unicorns a while back. So there's probably, 120, let's say, unicorns here in the country and growing very nicely. And that's, of course, not necessarily a destination, but just a proxy for, how this ecosystem is thriving. As youngsters think about their career choices and opportunities, and you said, fail fast early, we personally are super excited about the entrepreneurship opportunity in India. And I thought it'd be nice to get your thoughts on, just at a macro level, what you see the opportunity space like, and and any thoughts for entrepreneurs as they're contemplating should we become an entrepreneur or not.
Yeah, look, I mean, I think we all waited for this time, and you just said that my 20 years, I wish I was born 10 years later. So people like us had to wait a lot of time for the real inflection. I think the inflection point started coming somewhere in 2014, 2013, many years after I had journeyed in the consumer tech space. I think the time could have never been better, because all the key constituents are in place, right? The consumers, the market size, the addressable markets, the funding environment with really great backers like you guys. I think all the key constituents are in place, and it could have never been a better time. And of course, the country has a huge headroom for growth, right? Other than any other, if you compare to any other country. And the other very interesting opportunity is for a lot of Indian entrepreneurs to build Make in India, Made in India, and to develop services for global, right? So today's date, if you look at the mobile apps qualities and the product qualities, they are of the same quality as any global, global fintech or a global service provider. I mean, I think, when we look at INDmoney and compare, we feel that we can make it even better than global companies, right? Which are highly valuable. So I think we do have the talent also now to develop good services. So clearly, I think the opportunity and timing couldn't have been better. Everything is in place. All the decks are in place in the market right now, in the country right now. So I think the outlook is amazing. I think there would be, so if you see my outlook is, if you see the way we look at the Indian listed space, there's Nifty 50 companies. The Nifty 50, what it looks today, what it would look 5 to 10 years from now is going to look very different. And it will be these tech companies which will occupy, a lot of these tech companies which will occupy Nifty 50. The third thing I want to share is that if you see the Google of India is not Baidu. Okay, it is Google, and Facebook of India, or is Instagram of India, WhatsApp of India is WhatsApp, right? I think that part is very clear, right? And let's not try to fight that part, right? But there are so many services in financial services, in health, in agri, and hundreds of such categories and sectors, which are still to be built out. As I said, in the fintech space, I think it's just payments, right? And then the rest is, a big blue sky out there. Health tech, just kind of emerging and evolving, right? I mean, I think my ex-teammate Vikalp is building a beautiful startup called Ika Care, for example. So I think it's just the whole ecosystem, and the sectors are wide open. Obviously, we will see, not everybody is going to succeed. There will be failure rates, but the people who fail, they get up again and try. You try 5 times, you finally succeed at different points of time.
That's awesome. Yeah, actually, I've stopped using the word failed entrepreneur because you learn so much when you're unsuccessful. So I've started using the word unsuccessful because I think the learnings are just amazing. As long as you, as you say, take the right lessons out of it, and jump back, stand up one more time, and continue attempting, right? And sooner or later, a bigger success will happen. Great. I think, Ashish, lovely to talk to you all the time. We've always enjoyed our conversations, and certainly, I think the learnings that you've had over the years, the excitement and the passion you have for INDmoney as well as for the ecosystem. Really appreciate your thoughts today. Thank you so much.
Thank you.
Yes, wishing you all the best at INDmoney, and look forward to meeting in person in real life.
Thank you. Take care. Bye-bye. Thanks, Sanjay, for having me over. Bye-bye.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.